We live in truly strange times. Nowhere more evident and best exemplified but in the financial markets. Now, if you're an investor today, just taking a look at the stock markets and you are just ultimately very perplexed with what's going on. It used to be that when you were to invest in stocks, there was always a degree of risk. But the idea was that if you were really to study it enough and analyze it enough, you could more or less control your risk, because in your rational assessment, you would know how the certain stocks are doing, and all of it made sense, at least from this rational point of view. Yet today, you have incredible examples of stocks that just totally defy any logic. Take, for example, your own understanding of cinemas. That industry has been affected for a very long time, as we all know. Cinemas have been closed because of course, restrictions from COVID. And during that period, of course, many people have been very used to watching movies from home, from their computers, from their smart TVs, with Netflix and other streaming giants on the rise. It is not unthinkable to picture a future where more or less cinemas are becoming more and more obsolete unless they're able to do anything about it or change the experience in a very significant way. So of course it is quite reasonable to come to the conclusion, and of course as we've seen, that most cinema businesses have been very much affected during COVID. Yet despite this understanding, this logic, and despite the fact that most people on Wall Street, they more or less anticipated and were gaming on the demise of many cinema businesses, yet a company like AMC in the US, which did incredibly badly during COVID, on the verge of bankruptcy, today has a market capitalization of $39 billion, at one point even $41 billion. And it makes absolutely no sense, because they're doing terribly. And this is when you start to realize that this has been happening pretty much throughout COVID. The COVID period, we've seen the rise of this quote-unquote meme stocks, the rise of these investing apes, as they are now called, retail investors, lay people who don't really necessarily resemble the typical image that we have of an investor, a person who's financially literate, but literally an ordinary person who might be financially illiterate, but has now come to really influence the market. And these really are a collective of retail investors, ordinary investors, who are able to pool their power together and, surprisingly, coordinate it to actually influence the financial markets in ways that no one could ever imagine before. And this is truly incredible. We have seen it. I've actually done a video on it when I talked about the rise of GameStop several months back. And of course, other companies too, we've seen the same thing happening. Companies that are doing terribly, but somehow they've been on this insane rise and have bigger market capitalizations than even successful and relevant companies. And it's incredible when you actually see what's going on. And what's really going on is a perfect storm of conditions. Essentially, we have COVID that's happened, that's put a lot of people at home. And you have the rise of these zero-commission trading apps like, for example, Robinhood, and also other platforms in other countries. But most importantly, we also have the rise and really the critical mass of what's happening at Reddit and platforms like Reddit on social media, and these networks where people can come together and essentially mobilize. And a really interesting shift of the cultural zeitgeist of these retail investors who used to be fragmented in all these different splinter groups, but they've now come together and they're able to really pool their resources together around certain ideas. For example, in the instance of AMC, it was a failing cinema business, more or less. COVID has put such a toll on it. It's got negative cash flows, incredible amounts of debt, and more or less a roadmap to the future that is incredibly challenging because of COVID and the shifts in movie consumption behavior from people going forward. That's what we've mentioned with Netflix and the new pattern of consuming movies being largely digital and at home and very personalized. And these hedge fund groups have actually put these short positions that they were counting on the demise of AMC, and eventually these apes, as they've been referred to, decided to come together to directly challenge Wall Street and show the hedge fund people that the little people count. And within a short span of time, we saw this massive explosion in the stock prices at the worst period of AMC, and now it is really at its historical high. The stock just soared beyond all reason just because of the perfect storm where COVID has brought together all these circumstances and created this new class of investors I've talked about in some of my older videos. This new class of investor that Wall Street can no longer ignore. And it isn't just Wall Street, but also businesses. In fact, even the CEO of AMC realized what was happening with the rise of these meme stock investors, these apes. And he's actually been paying service and respect to these new collective of investors by engaging with them through social media, and also even making plans to donate money to certain gorilla conservation funds in respect to the ape investors, as they're known. And so for the first time ever, we've really seen how the online collective of technically non-financial people now have a space in the financial world. And in a way that is very exciting. Indeed it is. We've seen a democratization of finance, of investing, and truly it represents how the barriers of investing has been so lowered to a point where now everyone can participate. And indeed they have. Aside from, of course, AMC, we've seen the case of GTT, a telecommunications company that's on the verge of bankruptcy, having the same treatment. Of course, GameStop, Homestar International, all these companies that don't make sense to traditional financiers, that are doing incredibly badly, yet they have now received incredible valuations. And no one could have predicted this. And perhaps even more unique is the fact that these investors, they don't really operate on the same sort of financial mindset as most investors. They pool their money around simple ideas that might be very irrational. For example, challenging Wall Street. They pool their money around following the footsteps of these financial influencers on YouTube, on TikTok, on Twitch, on these platforms that have now gained the power to influence millions and move their capital in a very influential way that can sway financial markets. And that's what we've seen, this constant rise of all these different meme stocks. But here's the thing, although we have seen more or less the explosion of many of these companies right now, I guess the question that we really have to ask ourselves is, with all this momentum currently happening, how long is it going to last? You see, most people, especially the ape investors that are involved in this, they truly believe that they are pushing companies to new heights. But as much as they can push the share prices of these companies to greater heights, they are unable to change the basic fundamentals of the business, especially against its actual performance in reality. Unless we're talking about a situation where a certain company is able to actually issue new shares and raise capital, and hopefully have better cash flow, and potentially to engage in new activities or perhaps even change their business models. In many of these circumstances, we are still faced with companies that are failing or facing very difficult situation. And indeed, in most cases, as we've seen with the meme stocks, a lot of the ape investors are actually against the issuance of new shares because it dilutes their own shares. And so there is really this conflict and this paradox there. The fact remains that what we are essentially dealing with are still companies in trouble. Yes, a valuation might tell a different story. The share prices might be incredible, and they may match or maybe even outperform some of the best companies right now that are doing incredibly well. But the fact remains that we are still faced with many of these companies that have significant issues and challenges ahead. And especially if that challenge is one of negative cash flow and maturing debts, then you really start to wonder how long those valuations can be sustained. Because as much as the markets have become so irrational through this COVID period, there's no escape from the irrational truth. And this is why many analysts, they've actually gone out of their way to point out that what we're seeing with the meme stocks at the moment is very much a concerning bubble. And as much as these apes can try to pile on to these stocks, there will come an inflection point. And in many ways, there is not much of a difference between what we're seeing now and really the pump and dump schemes of penny stocks from decades earlier. We're essentially seeing more or less the same things, just the way it is happening now today is much faster, much more exaggerated and dramatic because of the technological shifts that we're seeing. But regardless of what you might view the conclusion to be, there's no doubt that what we're seeing now is the rise of the apes in the financial markets. And technology has really created an incredibly unpredictable and also unforeseeable force that will affect the risk management policies of investors, investment firms, and banks going forward.